Hey, what's up guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video I'm going to break down two trades for you that I took on both GBPUSD and NAS100, and both of them were profitable trades, and I want to show you exactly how I did it, guys. If you don't know, I recently released a new tool which is an expert advisor, but it doesn't have anything to do with signals or EAs. Like, it's an EA, but it doesn't trade on your behalf. What it does is that it actually calculates the risk to reward ratio trade before you enter it. So instead of manually calculating your risk to reward ratio or using a website and giving it the peep amount, the stop loss to take it, like that takes you 5 minutes, we literally released something that does everything for you in less than 2 seconds. And I want to show you exactly what happened. But before that, I want to show you the trade that I took on GBPUSD, which is absolutely crazy. Okay, so this is a trade that I took on GBPUSD. Let me do a little bit of replay for you. Oh, sorry. To show you the exact setup that happened. It was a really good one. And then I literally noticed it at 8 o'clock. Around 8 o'clock. So this was GBPUSD when I opened the charts on 5-minute time frame, and then I noticed that the market is trying to create lower lows and lower highs. So it means the trend of the market is bearish. I changed it to 15-minute time frame to make sure that it hasn't touched any support or resistance levels, any high probability supply and demand zones, and it's actually super bearish because of this massive breakout structure that happened right here. So because it used to be a major support level that got broken, and then it just kept coming down by creating lower lows and lower highs. So this is 15-minute time frame. But what I did, I actually changed it to 4-hour time frame to clearly see all the gaps that the market is creating. And then I noticed that we have a huge gap right here. Right above it, there's a huge gap that still is not tapped into. So this huge gap, there's a gap right here. There's a huge gap right here. They have to be filling. They have to be filled sooner or later. We don't know exactly when, but that is the probability of the reverse of the price reversal. So it means that there's a high chance that the price sooner or later tries to reach these levels to fill in all the gaps, because there are so many sellers here who put their stop loss above these areas and sold the market, and then it did a little bit of correction and then dropped again, sold the market. So there's so many stop losses around these areas. So in this case, I still kept it on 5-minute time frame to see if there's any high probability order blocks, supply or demand zones, and then I can actually take it accordingly. And then I noticed that there's nothing right here. So there's only one high probability supply zone from here to here. This is the first high probability supply zone, and we have another one right here. Guys, if you don't know, I'm repeating it on every single video. If you don't know the definition of high probability supply and demand zones, I highly recommend you to watch the video that I'm gonna put above this video, and it's fully all about high probability supply and demand zones or smart money concepts trading strategy. But after watching this video, guys, not right now. I'm gonna put a card above this video. Go check it out after watching this video. I explain everything from A to Z, what it is and how you can use it. Okay, so but if I want to tell you what it is in a nutshell, is actually the gap between the candle that drops out of the box and the next candle that happens after that. So there's a gap between this candle that formed after this drop and this zone right here. See, there's a gap here. So that's why this is a high probability supply zone. The same as here. If you want to find a high probability supply zone, you got to find the last bullish candle. If you want to find the high probability demand zone, you got to find the last bearish candle. So in this case, since I want to find the gap that is around our supply zone, I gotta find the candle, the last bullish candle, which is these two. If you can find two back-to-back candles, you take both of them. In this case, we take both of them. And then you see that if I take both of them, like from if I draw the rectangle from the top all the way to the bottom, this candle is the first one that dropped. The next candle never tapped into this zone. So that's why there's a gap between this zone and this candle right here. See? There's a gap in between. So that's why this is another high probability supply zone. So what I did was actually waiting for the price, and then I noticed that there is there's a high probability demand zone formed right here. So, and the reason is that, as I said, this candle, huge spike. The next candle never tapped into zone, so that's why there is a high probability demand zone right here. The reason I didn't take a sell trade is because the risk to reward ratio would be terrible if I entered my sell position here. First of all, you should enter it right here, not here. You gotta take your sell position after the break of previous candle, which in this case we gotta pass the high probability demand zone, which I don't want to do that. So that's why I didn't consider this one. I was waiting for the price to tap into this level, and it actually did. Right after it tapped into this level, I had my buy stop here and my stop loss below this candle. Why did I do that? Because of one reason. First of all, we have this major supply zone and a major resistance level. Look at this. I'm going to change the color so you can actually see the difference between resistance level and high probability supply and demand zones. See, there's an obvious zone which is our resistance level, and there is a bunch of liquidity above these levels because there's so many sellers that actually sold the market when this resistance level formed. And where did they put the stop loss? Above the zone, right? One here. I mean, there are millions of dollars above these levels. So I said, okay, we have this high probability demand zone, the price is consolidating, and also we had a break of a structure right here, so the trend of the market is trying to be bullish. And right after forming this high probability demand zone, I have a really good momentum to actually take a long position. And what I did was, to be honest with you, I kept it all the way to here, all the way to here. So it was 1 to 3, no, not 1 to 3, 1 to 1.3 risk to reward ratio, less than 1 to 2. And what happened was this: literally with one candle here, I close it here, I could take a really good position. And this is the results on my FTMO challenge that I recently took, and these are the trades. So GBPUSD 420 pounds, and today's date is 12. Yeah, the first trade on GBPUSD 420 pounds, and 2 trades on NAS100, which is 30 pounds and 120 pounds. So this is a very small win. I wasn't supposed to trade, but I just wanted to actually take a really take that trade, even though it's a small one, because the entry was good. So my main trade was this one, GBPUSD. It literally broke above it. God knows how many sellers got stopped out around this area because they think, okay, hit the resistance level, sell, hit the support, buy. You gotta do the exact opposite if you do want to trade according to the banks. And I deleted this one, and then I said, oh man, that's a really good setup. It really happened, and it made this supply zone invalid just because we had a shadow above the zone. It didn't get respected. The zone didn't get respected. So I'm going to delete this, and then I was done for the day. So let me show you what I did on NAS100, which was a really good one. And even this one had so much potential, and I took it, but I closed it early. So it was around 10 a.m. in the 10 a.m. Eastern Standard Time. I noticed that we have this beautiful demand zone, high probability demand zone, because this is the last bearish candle, and this is the first candle that actually spiked towards upside. The next candle never tapped into zone. There's a gap in between, and that's why this is a high probability demand zone. And I was waiting for a good momentum, and I literally saw this one right here, but it didn't enter my buy position ASAP. I had my buy stop here and my stop loss here, and I wanted to close it right here, but I didn't. So what I did is that I was waiting, and then my buy stop got triggered right here, and the formation of the candle was really cool. I was about to get stopped out, as you can see. It was so close, but I had my stop loss below this candle, and that's why I was kind of confident about it, because I knew that because of these shadows, buyers are trying to push the price towards upside. It means that this zone is getting respected by the buyers, so buyers are getting stronger. So I had my buy stop here, it got triggered, I had my stop loss here, and my TP was right here. But what I did was I was waiting, but I closed my half of position here, like I closed 50% of it here, and then I moved the stop loss to break even. Not even in break even, it was in profit right here. So my second TP was above my stop loss, not even on break even. It was here. right here, right below this candle. I said, okay, I'm gonna wait for it. I closed 50% of my position, and then the rest of it, if it does get stopped out, I don't care, I'm not gonna lose anything, or I just get a little bit of profit. And this is exactly what happened. It literally tapped into my TP, it stopped me out in profit, and then it kept going up a little bit. No, it actually kept going down and literally stopped out everyone. So I did a really good thing that I didn't keep my trade all the way to here. I could easily get a 1-to-1 with 1.5% risk and be out of the market immediately. And this is exactly what I did. It was a really good one. I'm happy that I closed 50% of it. I just could close all of them right here, but I said, okay, you know, I wasn't even supposed to trade, so why not just leaving it while it's at break even. So let's see what happened. And then it came down, and then it broke below this zone, made it invalid, and now as you can see, the price is right here after this consolidation. It went up, came down, went up, and we have this high probability demand zone right now, which is forming, but it's too late. It's Asia session right now, so I'm not gonna trade. I'm just showing you what exactly happened. So thanks for watching this video, guys. If you have any question, drop your comment here. Before you leave, let me show you the results of Gold EA Incubator on our $1,000 account. As you can see, today's date is May 12th, and we are up 130% in profit on a $1,000 account, which is $1,238. And this is our $2,000 account, which is 14.69%. And it's $293. It's a relatively brand new account. We started in April 25th. This one is March 7th, and this one is actually 28th on a $5,000 account, which is $459, 10% profit in less than, like, in 2 weeks, 10%, 5% a week on mid-risk preset on a $5,000 account, which is absolutely crazy. So, and the indicator that I was talking about, the EA that I was talking about, is this one called Profit Mastery Incubator, and I'm gonna launch it soon and let you know. And this is how it does. I have a separate video for that. I'm not gonna waste too much time, but you know, you just give it the percentage of risk relative to equity, that how much you are willing to risk, let's say 3%, and then you turn on the automatic lot, and it gets activated. And let's say that you want to have your buy stop here, your stop loss here, your TP here. It automatically calculates the lot size for you based on that 3% risk. So if I want to buy it right now, I have my white line, which is my entry point above the previous candle, which is going to be a buy stop, and my stop loss is here, my TP is here. So if I press OK, it's gonna open a buy stop for me, which is 0.05, and because I want to risk 3%, sorry, 5%, I think it was 5% if I'm not wrong, 3%, it's going to be right here, 41 pounds on a $1,400 pound account, which is a demo account. I just want to show you, it's actually 3% of that. And if it triggers that and then it hits my TP, it's going to be 57 pounds. It literally gives you everything, depending on the risk that you want to have. But stay tuned. If you want to grab your license for Gold EA Incubator, you know what to do. Go to smartincubator.com, grab your license, send us your account number, and we'll manually activate your account. Thanks for watching this video, and I hope you have a profitable journey with us.